Hi, welcome back to today's More Report. Chart appraisals on Wednesday, the 16th of December, with me, Richard Pro Market Analyst at Handtech Markets. It's Fed Day, and we are still looking towards the Fed meeting this evening, although we've just had out the UK employment growth figures, or employment figures, unemployment dipping to 5.2%, which was below expectations, 5.3%, but the big move coming in the fact that wages are falling back on an ex-bonus basis to 2% from 2.5%, so that is a disappointment, and sort of pushes out the hopes of a rate hike from the Bank of England, I would imagine, because the Bank of England is concerned about a rate, how wages are sort of beginning to fall away again. However, the impact that this is having on sterling is fairly minimal, actually. Not too much has happened either way, and that generally is because we are seeing pretty much the market positioning ahead of the Fed anyway. Sterling was around about 150 big figure just before the announcement. It's pretty much there as we speak, so no real movement, but you'd say that the technical outlook remains corrective. Actually, we've had sort of 3 days in a row, or two strong bear days, and a third as we speak, and that move has come with sort of crossover, negative crossover on the stochastics. Also, the RSI doesn't look that great either. The big downtrend came in as resistance, and I think that is now the market positioning for a weaker sterling. Really, I think that a weaker sterling is probably going to be what we're going to see in the coming months as the Fed hikes rates, and it seems as though the chances of a UK rate hike get sort of pushed out, and that should drive cable lower. And so, even on the chart here, I'd be selling into strength. You'd see that you're trading beneath all the falling moving averages. All momentum indicators are negatively configured on the daily chart, and even then on the hourly chart, you've had a small head and shoulders top pattern, which actually gives us a downside target of around about 149.80. We actually haven't. We're not a million miles away from that 149.90, so that's interesting already. But it certainly looks like rallies are being sold into. But how is this going to be impacted by the Fed? Well, a dovish Fed would presumably give sterling a bit of a rally. You've got that downtrend that comes in at 52.28 at the moment. So 52.40 is sort of like that rally high that we saw last Friday. So big resistance coming in there. It looks like the chances are that over the coming days we're likely to see volatility, obviously on the back of the Fed, but possibly further sort of retracement of this move. And I think, generally speaking, the market is going to take that view of a weaker cable in the coming months. So it's sort of playing into this whole argument. Again, the volatility is going to be big tonight, so you've got to be waiting and seeing how this statement and the rates decision comes out. But generally speaking, the technicals are pretty negative still on cable, but we wait and see how the announcement tonight impacts that chart. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.